On May 21st, U.S. 10-year Treasury yields hit what has now become a 5-month high of 4.6%. Since then, they've drifted lower, oscillating between 4.5% on the upside and 4.2% on the downside, and currently sit around 4.4%. Now, the primary force shaping rates right now is the tension between the Treasury's need to roll over $9 trillion of debt in this year, creating enormous supply, and strong economic data recently reinforced by some unexpected tariff revenues. Now, despite a fast-moving macroeconomic backdrop over the past 6 months, yields have held relatively stable. That stability may not last, though, with a flood of key economic data this week. On Wednesday and Thursday, 4 members of the Magnificent Seven, Meta, Microsoft, Apple, and Amazon, will report earnings. These firms have been key drivers of recent equity strength. A miss from any or all of them could undermine the wealth effect that's been supporting consumer spending. Meanwhile, 2 major macro reports are on deck: the PCE inflation data on July 31st and the employment report on August 1st. Both could exert complex influences on 10-year yields. For example, when the Fed last cut interest rates in September, 10-year yields spiked higher, reflecting market fears that looser policy on the short end might reignite inflation. Today, while economic momentum has cooled slightly, tariff-driven inflation concerns are still around. So if the PCE shows little movement and the jobs report comes in weak, markets may begin pricing in a near-term Fed rate cut, which could potentially push 10-year yields lower as well. So if a trader believes the 10-year yields will move higher from here, they could express that by buying the August 10-year yield contract at 4.34 and target a move to the May highs of 4.6. A stop for this trade can be placed below at 4.10. This trade can make $260 if the target is reached and risks $240 if you're stopped out of your level. Now, if a trader believes that yields will fall from here, they could sell that August 10-year yield contract at 4.34 and target a move back to the September lows of 3.65. Now, a stop for this trade can be placed above at 4.70. This trade can make $690 if the target is reached and risks $360 if you're stopped out of your level.